All right, what is up, tycoons? What is up, traders? Super excited for today's video. We're going to take a look at Nakamoto Games, ticker symbol NAKA. I'm going to break down the daily chart, but before we do so, we have to talk about this, guys. This thing went on a 360% rally in 2023 already. This is the first date of 2023, and from the lows to the highs, over 360%. And we have seen a pullback, and we're really just consolidating in this area right now. We are going to go over some of the key levels and, current setups that I'm paying attention to, both bullish and bearish. So that way you guys are prepared. We'll also take a look at the MACD and the RSI and how I use these to help really give myself an edge in the market. Okay, but before we go any further, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on the YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, crypto involve a significant risk of loss and is not suitable for all investors. So make sure to read through the full disclaimer before moving forward, and we'll go ahead and jump right into the video. Now, before we go into the chart, I just want to briefly tell you guys about NAKA real quick. The NAKA token is integral to the Nakamoto Games play-to-earn ecosystem. It gives players access to any of the games within the ecosystem while also providing a system to reward the most skillful players. Now, over 65% of the world has an internet connection. 43% of Americans can't meet monthly living expenses. Developing countries fare far worse, with many relying on remittances from overseas family members. Play to Earn gives anyone with an internet connection the opportunity to earn cryptocurrency and generate a sustainable source of income. Nakamoto Games is building the premier play-to-earn ecosystem where developers and players can earn in endless blockchain-based games, and developers can deploy games to a broad user base. Now, recently, Nakamoto Games has a very bullish sentiment score, is rising and outperforming the crypto market. So we're going to take a look at the current setup that we have right now. And I'm going to go over, some of the technical indicators that I use and why I use those. So make sure to smash the like button and subscribe to the channel if you guys are new. That way you guys don't miss any of the videos. And if you want to see your token or your crypto in the next video, all you got to do is comment down below. Now, the first thing I'll go over here is going to be a simple chart pattern, okay, known as an inverse head and shoulders, which is forming right now, okay? So just because a chart pattern is forming does not mean it's confirmed, but it's something you want to keep on your radar to see if that pattern is going to continue forming and end up playing out. Now, what we have is an inverse head and shoulders pattern, which is known as a bullish chart pattern, indicated by this left shoulder we have right here. And you see that we're starting to pull back a little bit, and we're potentially going to be forming a right shoulder at this area. All right, so, we have our left shoulder here, we have our head, and then we have a potential right shoulder looking to form if we continue to pull back a little bit more. Now, if we break through some of these key levels, right, like if we come down to about 21 cents, all right, that's going to invalidate our inverse head and shoulders. And if we come down to about 18 cents, that also is going to invalidate that inverse head and shoulders, okay? But for now, as we consolidate through here, we are forming a right shoulder. And if we can break our neckline, we do have the chance of coming up to our overhead supply zone, which is an area of resistance, an area of sell orders that has previously pushed price lower once we entered into that region. Now, if we're able to break out above that supply zone, we do have some bullish price targets to the upside of 0.429 as well as 0.498. But there's a lot of work that needs to be done for us to get there. Now, markets tend to move in 3-wave and 5-wave structures. And so that is why I have our major retracement levels right here, which are the 38.2, the 50%, and the 61.8% levels. What these are is these are the 3 most common and well-respected retracement levels using the Fibonacci retracement tool. And you use these because nothing moves in a straight line up or in a straight line down. Rather, you would get a move up retracement, continuation of the trend, or a move down retracement, continuation of that trend. So, that's why I'm using these. All right, we've had a strong move up. And if you pay attention, we retraced all the way down to our 61.8% retracement level, and then we bounced there, guys. Not only did we bounce off of our 61.8% retracement level, we also got a MACD entry signal. So let me explain how the MACD works a little bit here, all right? You want to pay attention to this red line. And when this red line crosses above the blue line, that would typically be known as an entry signal. Now, no one indicator is going to work 100% of the time. So it's really best to try to combine some of these, different signals, different indicators together to really help give yourself an edge. Trading is like going to battle, it's like going to war. You need to have an edge and you need to have the proper weapons at your disposal and know how to use those weapons correctly so that way you can increase your odds of success on the battlefield. So what I mean by that is look how we come down, we test our main support level here of 61.8 and we start finding support, right? We're starting to see consolidation. There's 3 stages to a reversal. You have the downtrend, you have your box consolidation, and then you have the breakout, right? And so you see we have the downtrend, then we form a box consolidation right here. We're holding above our 61.8% level, and then we end up getting a MACD crossover to the upside, and we had a strong move to the upside afterwards, right? Now, since then, the MACD has started to curl back down below, but as you can see, it's really flat. It's not giving a clear entry or exit signal at the moment. All right. Now, what I like to use on top of this as well is the RSI, which stands for your relative strength index. It's going to measure the relative strength of a token at its given price. And specifically, what I like to do is I like to look for divergences. So to explain what that is, all right, very quickly, notice how we have a high right here, and then we have a higher high. So the token is clearly in an uptrend heading higher in price. The relative strength index should be mirroring what the price action is doing and reflecting that. But sometimes it does the opposite and creates a divergence. These divergences are oftentimes very good indicators. So what I mean by that is take a look how at this point we have a high, okay? And then over here, we have another higher high on the price action. But on the RSI, we actually have a lower high. So we're actually in a downtrend. We're losing relative strength as the price of the token is going up. This is a term known as bearish divergence and indicates we could see some type of a pullback, right? And sure enough, we did get a pullback from about that 36 cents region all the way back down, guys, to about 18 cents. That is about a 50% drop, right? And so you may have not been prepared for that. Hopefully you guys weren't one of the people buying the top right here and then panic selling when we came down to 18 cents because you weren't really looking at any of the indicators, right? And you would have seen that, hey, maybe I shouldn't buy right here because we have a bearish divergence. We're also above this dotted line right here, which is 70, right? And so 70 is the technical definition of overbought on the relative strength index. And as a general rule of thumb, it's not always the best idea to be buying something when it's above overbought conditions, as the likelihood of a pullback is much more increased, right? Now, just because something's overbought does not mean it can't go higher. Perfect example, we were very overbought right here. And look what happened. We did pull back, but look, we went much higher, right? So that's just a little bit of how to use the RSI. Now, I mentioned combining things, right? So we have the bearish divergence, okay, right here at this point in time. And look what happens afterwards. We get a MACD sell signal as well, guys, right over here where the red line crosses below the blue line. So really, we had about 2 indicators there, all right, the bearish divergence and the MACD exit signal, indicating that we could see some type of a pullback. And we pulled back to our major retracement level of support, which means that this is healthy retracement to possibly continue the uptrend. Now, we do have to talk about the realities of breaking our major retracement levels. We talked about how you can use the fibs to spot trend continuation with a move down retracement continuation and a move up retracement continuation, but you can also use it to help spot a reversal both to the downside and the upside. So if we move up as we've done and we come down and consolidate as we're doing right now, but we end up breaking through our retracement levels, then there's a strong possibility we could see a downside reversal, right? And same thing to the upside. If you move down, retrace, consolidate, and then break through those retracement levels, you could spot an upside reversal. Okay, so for the moment, all right, we're not going to be super bearish until we're below 18 cents, right? Once we break below this major retracement level here, then and flip that from support to resistance, then that's when we have an increased chance of retesting some of our previous lows that we were at in the beginning of the year of 2023. So definitely keep that in mind, okay? That's something you want to pay attention to. All right, not only do you need to prepare yourself for any bullish scenarios to the upside, okay, but you need to be properly prepared for any bearish scenarios to the downside as well. Now, one thing I will mention that we did get that I really like to see, sorry about that, is so we have this initial bearish divergence trend line here. And take a look how we broke out right now, and then we came back and bounced off of it. That is a good sign, but it's something that we really need to keep and maintain. We need to stay above this prior resistance level that we were rejecting many times, and we need to now flip that to support and stay above there to have any chance of a bullish move to the upside. And the reason being is because if we don't and we get a look above and fail, that's going to be significant and actually a bearish indicator that a drop could be coming. And the reason being is because bulls right now are really presented the full opportunity on the breakout of this initial RSI downtrend, okay, that we had right here. And so while bulls have the opportunity, they need to take advantage of it. If they don't take advantage of it and bears are actually push price lower, it's going to show that bears are the ones who are actually in control of the price action right now, rather than the bulls, because they failed when given the opportunity to really push things higher. So hopefully you enjoyed this video. If you did, smash that like button and subscribe to the channel. Don't forget, I do these viewer requests every single week. So if you want to see your token or your crypto in the next video, all you got to do is comment down below and I'll get to it as soon as I can.